It's you know who back with another episode of Pure Perspectives. Gary, how we doing?
We're doing great. Doing great.
Gary is down in Texas. I'm in California. Today we're talking about a very important acronym. There are a lot of acronyms in our business.
Yeah.
I
Too
way
many.
too many, but this one is probably one that we talk about day in, day out. And I think it's one that there's still some confusion over.
Hmm.
And probably, I'll look to you on this one, but probably the thing we run into the most that can derail a deal. Fair statement?
Yeah, it's probably the number one deal killer.
Deal killer. And that acronym is DTI, debt to income. And this is a ratio that's very important to lenders so that they understand kind of your financial snapshot. So why don't we start with the very basics? We want to get down to the fundamentals on this one. What is
Yep.
DTI, Gary?
Simply put, without using a bunch of acronyms, debt to income, meaning how much income do you make on a gross amount
Yep.
per month?
Hmm.
And we take that number and we can use, in some cases, you can use 57% of that income, FHA. Conventional is going to be 50%. So we need to stay below those numbers. So the easy way to think about that is if you make 10 grand a month and your debts, including everything that's on your credit report, student loans, personal loans, credit cards, your mortgage statement, including your insurance and taxes,
Hmm.
all have to stay below that 50% number. So in this case, $10,000 gross income, $5,000 is your max monthly outlay to include all of those different items.
Yeah, I would say in conversations, this is probably the biggest area of surprise for borrowers that are going through the process. In a
Yeah.
lot of cases, there's just stuff they forgot about on their credit report. Basically, what happens is when we run your credit, we get all your liabilities, right? So we'll look at that and we'll say, hey, there's a car loan, there's a student loan, there's outside credit card. We'll determine what is going to go away before closing,
Yep.
blah, blah, blah. And then I think the biggest area that people miss, and this is also an area where things like, homeowners insurance can have a negative impact on, is
Yeah.
your incoming housing expense. So
Hmm.
you're renting an apartment, you want to go buy a home, and that home is going to cost you, call it $3,000 a month. And that
Hmm.
$3,000 a month is principal, interest, taxes, and insurance.
Yep.
So that amount is going into your debt to income calculation. So if you have that and some
Yeah.
car payments and some credit card, blah, 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 like what
Yeah.
Gary's talks about, these ratios, like it can get troublesome pretty quickly. And so
Yeah.
when we and I think a lot of the frustration in some of the conversations we have is like, why are we worried about these liabilities right now? I just want to know what I qualify for. Well, it is a very big component of what lenders look at to
Yeah.
look at your, call it the ability to repay the loan, right?
Hmm. Sure.
And so I think the biggest area is people forget that we need to look at the incoming house. And I would say it's probably the area where people get too far over their tips. Like,
Hmm.
hey, Clark ran me a mortgage quote on $1 million home and my principal and interest is going to be this. We can afford that,
Yeah.
right? Like it's just literally within that box. We can afford that much a month. Well,
Hmm.
insurance is going through the roof. Property taxes
Yeah.
are enormous. And so
Yep.
now
Yep.
you've got that larger number going against your gross monthly income on top of what you already have. And so
Yeah.
that's the
Yep.
where people get into frustrating situation.
Yeah. No, that 100%. I think the key, like when I'm having the conversation with folks, we talk about this is where you are right now. But you're out shopping, and we all know how it goes when we go out shopping. We have
Yep.
an idea, and then the idea is like, maybe I can't find something, and then we start expanding our search, and then that's where, you get a little scope creep in
Yep.
there, and now we're going from 450 to 525. Well, not only is that gonna increase your payment, the taxes and insurance liability on that property is going up.
Yep.
So now all of the factors are going up. And so I always tell folks, hey, insurance isn't our world, but we can guesstimate.
Mhm.
do a decent guesstimate on where it's going to be in the areas that we're in. But, the taxes, there's plenty of information out there. You can get pretty close on taxes. And so it's important to, depending on, county to county, taxes can be different. Parker County versus Erath County here in Texas, you're going to be a lot lower in taxes in Erath than you are Parker County. But, within the county, taxes could be higher, if
Yeah.
you're in the city limits of Weatherford versus in the county. And so you need to keep that in mind when you're looking at different properties.
Yeah, and to the point on the tools, I mean, I think Realtor.com does a decent job
Hmm.
of laying out, hey, this would be your monthly payment, and it
Yeah.
has taxes and insurance. It's directionally correct. I think it's
Hmm.
what they do a good job of saying, like, hey,
Yeah.
this is the total, nut per month that you're
Hmm.
going to be on the hook for, not just the principal and interest. So, kind of to tie it back to kind of previous video where we talked about pre-qualification versus pre-approval, this is
Yeah.
what the pre-approval process is really intended for, is like, let's ensure
Yeah.
that what you're out there or what you have in mind as your
Hmm.
target property and target purchase price and
Yeah.
target loan amount, that your financial situation, whether it's you and a spouse, you and a partner, whatever it may be,
Hmm.
are within the DTI range in order to qualify for a loan. Because to Gary's
Yeah.
point, in a competitive market, the scope creep is like, well, we were
Hmm.
looking at a million, now it's 1.2 million. Well,
Yeah.
yeah, that does have an impact. And so that we need to know
Yeah.
where you are in that threshold. So we say, like, look, there's a little bit of wiggle room. We can go up a little bit,
Yeah.
but there's not a lot. So, it's and it does, to Gary's point, it does vary a little bit by product, you know,
Hmm.
FHA, conventional, what have you. Like there is
Hmm.
different thresholds there, but
Sure.
it really is the biggest part of the pre-approval process that we
Yeah.
evaluate.
Yep. I'd agree.
Yeah. So it's something you want to understand. It's something that your loan officer is here to help with.
Hmm.
I would say the most challenging conversations are people that come in and say, I want to buy X amount of house. I know I can afford it.
Yeah.
Well, yeah, there's so many people that we go down that path with, that when we get down to brass tacks
Yeah.
and say, let's get your liabilities in, let's understand what we're really looking at, it gets pretty tight pretty quickly. So
Hmm.
that's what your loan officer's here for. That's what
Yeah.
our job is, to help you get pre-approved and make sure we're looking at all the scenarios and all the financial
Yeah.
implications on your credit, on your income, on your liabilities, so that we are handing you a letter for purchase price that you can feel confident in.
Spot on.
I mean, I think I nailed it.
You should have done this yourself.
In closing, I don't think I needed you.
I'm retiring.
I think this is going to get a lot easier in the future.
Yeah.
Hopefully, this helps understand debt to income, the
Yeah.
calculation, why it's important, why we
Hmm.
ask the questions we ask on the front end that some people do get frustrated with.
Yeah.
It's a matter of making sure that you're going to fall within the capacity of the lender. So,
Yeah.
as always, Gary, I guess thanks for joining.
Yeah. My
Yeah.
pleasure. It's been
Thanks for
great
being
once
here with
again.
me. If you
Yes.
have any questions, or if think you might be up against a DTI threshold, leave us a
Hmm.
comment. We'll get in touch with you. We can run the scenario, let you know
Yep.
where you stand. Give us a like, give us a subscribe, and we will be back soon with more content. Gary, stay cool
Have
down
a
there.
great week. We're going to do it.
All right. Thanks,
See
everybody.
you
Take
guys.
care.